Well, hello again, Maverick Currency traders. This is Mr. Rob Reinhold. I'm joined by Anka Sharma, and here we are into the fourth week of March. Can't believe that the first quarter is almost over of 2025. So we have two more weeks left. No, just one more week left to add on to our pip count in March, and then we close the books. In this session, we're going to be talking about the news of the week. We're going to talk about the broad markets, and then we're going to take all of the currencies, score them from a +3 to -3, and that tells us where to hunt for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Before we jump into the markets, let's talk about our Vegas Summit. It is coming up. It's very, very close. And we've been working on our theme here, which is how to use AI to make you a better trader. One of the things that I've been working on this week is basically how to automate the relative strength system that we use at Maverick, to where you can basically just have AI do it. You can give AI all the criteria you're looking for, and it will spit out, hey, dollar's looking good, yen's looking good, and Swiss franc and euro looking bad. It's going to do all of that for you. Really cool. This week, we actually had markets break a 4-week down streak. Now look, when I say break, I mean it barely closed positive. So it's not like this was a big, huge rally. But we did see the end. And we're going to take a look at the S&P chart. And I'm going to show you the candles that we got this week. The candles we got this week were actually fairly bullish. And I've been fairly bearish. And they've definitely made me look at it and be like, hey, you know what? Maybe I need to back off my bearishness a little bit, because I was getting to the point where we're about ready to go to -3. And -3 bearishness is very aggressive to the downside. This week, we got 4 central banks. The SNB was the only one who made a move. They cut rates as expected by 25 basis points. And then we heard from the Bank of Japan. Now, the Bank of Japan kept rates steady, but they said that they are starting to see wage growth in the lower earners. That's something that they pointed out that they haven't seen. And this is, again, inflationary. But remember, Japan has been in this deflationary spiral for the last 25 years. 35 years. It's now 35 years. The Bank of Japan has been trying to get inflation to take hold. It's kind of a weird thing, because we all have been dealing with inflation over the past 4 years, and we're like, oh, it's bad, it's bad. The Bank of Japan has been trying to get inflation back into the system, because deflation is just as bad, if not worse, than inflation. So they're starting to say, hey, you know what? We're starting to see some signs of growth. Everyone does believe that the next move by the Bank of Japan is going to be higher. This basically kind of added to that reason for it to go higher. We then heard from the FOMC, and there was really no surprise. And we saw really very little movement off of the FOMC report. Typically, you get a big 1-2% move off of this one. We did not get that, because they said exactly what the market expected. Number one, they stayed at 4.5%. And then they said, you know what? We think inflation expectations have gone higher, which makes us less likely to cut rates. But we also have downgraded our growth outlook, which makes us more likely to cut rates. As you can see, 2 different things. So basically, no change. They're basically saying, we're not sure yet. We're going to be data dependent in the market like that. And they also did not back away from their 2 rate cut projections. So that's where they are today. And they reiterated it in the meeting, is that, hey, we're likely going to cut rates twice this year. Bank of England was actually a little bit of surprise in the fact that it was expected that 2 of the voting members would vote for a cut, and only 1 voted for a cut. So slightly a little bit more hawkish from the Bank of England. And I want to get into this economic data, because this week, like I said, I was ready to pounce on the bearish side. And I'm not just talking about currencies, but I trade all assets. And I was ready to get even more bearish on stocks and options, bearish on futures, a little bit more bullish on gold. I was ready. I was just waiting for the confirmation from the charts. And the confirmation from the charts didn't come this week. And when we take a look at economic data, it actually came in pretty good. Now, I'm going to start off with the one that didn't come in pretty good, which is retail sales in the US. Retail sales in the US missed expectations, but it wasn't negative. 0.2, 0.3% is still like a 3% growth for the year. So that really didn't worry the market all that much. We did get higher than expected CPI out of Canada, so we're continuing to see higher CPI. But take a look at this. This to me was the surprise reading of the week. Kiwi GDP up 0.7%. They have been in recession. This is a really good number and basically puts the RBNZ out of the rate cut category. Now, look, they're not looking to raise rates, but at this point on, the Kiwi has been absolutely crushed over the last 3 months. It's been one of the weakest currencies. Now their economy is turning around possibly. We'll take a look at it on a chart, and you'll see that the Kiwi is no longer giving you any bearish signals whatsoever. On that same night, we had Aussie employment roll over and die. So the Aussie has basically taken the spot of the Kiwi. Where the Kiwi was weak, the Aussie was kind of strong. It just is now flipped. So a weak Aussie definitely looks like it. We got worse than expected employment data out of the UK. And we got this number right here. This number right here, to me, has been the biggest surprise. This is not a number we typically look at, and it is unemployment claims. It comes out every single Thursday. I have been waiting for this number to tick up because, again, the economy has been softening. We've seen a large number of layoffs in the government. Every 2 government jobs that are lost in the US, they estimate that 1 private sector job is also lost. It's very surprising that this number has not gone up, which tells us that people are actually able to go get new jobs that are being let go. And that was kind of my case for, hey, you know what? We're going to be seeing a lot worse employment, which means that the equity markets and everything are going to go down. Things are holding in. Look, it's not great, but they're holding in. Ankit, what do you think about everything that I just said, that it's been a little bit of a surprise that things are actually much better than the most bearish people out there expected?
Yeah, I totally agree with you. And, this is where I think we got to give some credit to the economy. I think overall the economy has been, pretty robust, and it has been able to absorb a lot of these nuances. So, I think this is what I'm waiting for. And I totally agree with you. I'm waiting for the data to show, what people are anticipating, because, a lot of times we see that traders get ahead of that move. But again, if the data is not if data is not there supporting it, then we can see a reversal there. I think that's really where we are. And maybe this is a little delayed. I agree with you. I think maybe there is, the job openings and everything is being there for people to, let's say, get new jobs. So maybe that is a component of it. So yeah, I would definitely want to be cautiously bearish here. Just because of the fact that we haven't seen the data really pull in as much weaker. We've seen consumer confidence weaken, and that kind of explains why retail sales have weakened. But we also want to keep in mind is that we have these blanket tariffs that's going to start coming in April the 2nd. So I think a lot of that, a lot of these tariff stuff got a little pushed as well. So perhaps the summer numbers I think will be a lot more important to watch, especially with this blanket tariff that goes across the world. I think maybe that's where we can see more in the data. But right until that happens, I think we want to be a little bit more cautious here.
Thank you, Ankit. So let's go in and look at the actual numbers for the week. And as I pointed out, it was a up week in the S&P, but boy, the smallest possible up week you could possibly see here. I mean, barely flat here. We'll take a look at the chart here. Crypto was actually up 2%. This is after losing, some of these coins have lost 30, 40, 50%. Ethereum is down over 50% from its high. Gold continues to crank, If you are of the mindset, which I am, that economic growth is slowing and inflation is increasing, that is stagflation, and gold is basically the only asset class that is safe under stagflation. So let's go in and look at the charts, because the chart here, this is what I was talking about. I've been waiting for this pierce, and again, that's what we did. We broke down major support, and I said, I'm not going to get bearish until I get a rally and a failure. So that's what I needed to see, a rally and a failure. So I got everything I wanted. I got the drop that I thought was going to happen, got the rally that I thought was going to happen, and now it's like I'm licking my chops thinking, man, I love bear markets. I love trading bear markets. And then I got this. Look at these 5 candles here. 4 of the 5 are green. 4 of the 5 are green, telling you that at the end of the day, there was more buyers than sellers. Now look, because of gaps, we had up days and down days, but when you take out the gaps, there's buyers there. But I also want to point out, look at these wicks. Look at the wicks. Every single rally was met with selling. So look, I am not bullish in any way, shape, or form here. But Ankit, I think you coined it best. I'm cautiously bearish, and it bothers me because I want to be aggressively bearish. Like I said, I love trading bear markets. I want to go to -3. Hey, let's go ahead. Everything looks great here. I can't do it. The data isn't there. The data is telling me just what you said. Be cautiously bearish. So what does that mean in the world of Forex and crypto? Well, let's break it down what actually happened this week. The European currencies have been the outperformers lately. Did they remain the outperformers? Well, the answer is yes, a little bit. The euro was down, but the euro's had a spectacular run. But when we take out euro, Swiss franc was the second best, and pound was up for the week. So the European currencies still seem to be at least one of the stronger ones. We did get a bounce by the dollar, and the yen was down a little bit by the end of the week. Had a nice rally early in the week, but everything really kind of fizzled out. The big story here is Aussie Kiwi. They have completely swapped places, and I think the Aussie looks like a much, much, much better short than Kiwi. And I'm really going to be looking at this pair. This is not a pair I trade very often, but Aussie-Kiwi pairing I think is very interesting here. Going over to cryptos here, okay, we got 1-2% gains. That's zero on crypto. That's basically zero. The best performer was Ethereum, but it's been the worst performer over the past couple months. So look, we'll take a look at the crypto chart, but there's nothing in the crypto chart telling me I want to be involved in crypto at the moment. So let's go ahead and take a look at a couple other markets. Let's score the markets and then move into our individual currency analysis. 10-year bond in the US, look at this. It's flat. It's flat. And this is why we're seeing a lot of flat movement. And in my end of day posts on Tuesday, I talked about, hey, this isn't a great market. The last 2 weeks, I've said, look at the movements. The movements aren't there. This isn't a great market. This is one of the reasons. Everything is in this pause. So the equity markets were in a big free fall, and over the last 2 weeks, they've really just gone sideways. Bonds, big free fall the last 3 weeks, been pretty much sideways. So until we get some real strong trending action here, I think we are in for more of the same. And take a look at cryptos here, the crypto basket. Yes, we had a big fall, but over the last 2 to 3 weeks, we're virtually flat here. So just like I talked about in my video, the market moves in waves. And sometimes there's a big swell and everything's moving, and then sometimes it recedes and everything's calm. We're just in that little recession or receding here, waiting for the next move to happen. In these conditions, you want to trade less. And then when the wave comes, you want to trade more. The biggest fallacy about trading is that you can show up every day, click a button, and make money. Theoretically, you can, but some days aren't good for trading. They're not conducive for trading. You need to sit those days out. And if you can recognize those periods, instead of clicking buttons mindlessly because the market's open or the market's there, you're going to do much, much better as a trader to be able to come in and out of the market like those waves. Just follow the waves of the ocean. And like a surfer, when the waves are there, go out and surf and catch some great waves. When they're not there, don't waste your time. Let's look at the economic calendar for the week. These are starting to become a tradable event. We haven't talked about European PMIs for a long time. They're actually starting to become tradable because they've been strengthening quite a bit lately. We'll have to see if these continue to strengthen. The euro is definitely on a little pullback. The euro has been the strongest currency over the last month, having a little pullback over the last 2 weeks. Can these numbers get that euro back to going higher? It's what I'm looking for. I do like euro, but it's not looking good at the moment on a shorter term chart. I need to see a bounce back, and maybe Monday's PMIs can do it. We have CPIs out of Australia and the UK here. And then the big news I think this week is down here in the US, core price index. It's supposed to come out at 0.3. If it's hotter than that, there's going to be a problem with that. If that number comes out hot, it's going to be a problem. Remember, last time I got this number, it was unexpectedly lower than expectations. We might get that same kind of thing. It led to a short-term rally that was sold off very, very quickly. So this week, we don't have any central banks. After a week of 4 central bank announcements, we now have a break, no central bank announcements. And for me, the equity markets, they're likely to stay weak overall, but I don't see imminent signs of another large drop. I just think we're going to churn in this area. Trust me, I would love to get more bearish. I want to get more bearish. But I have learned after 27, 28 years of doing this, that's my opinion. That's what I want. That's why I say almost every week, trade the market in front of you, not the market you want it to be. I want it to be a bearish market. It's not at the moment. So I have to wait for the data to confirm it. All right, let's go in and take a look at the currencies. I'm going to take a look at cryptos. Ankit's going to bring us through Forex here. And as you can imagine, I'm going to go through these pretty quickly because I don't see any reason at all to be interested in crypto at the moment. We are in downtrends. Any little rallies are very, very shallow, and then the falls are big. Shallow rallies, big falls. You don't want to be any part of this. Look, I've tried to be the guy that runs out into the freeway to pick up a couple nickels on a downtrending position. Then I run in and try to grab a couple nickels before it falls apart, before I get hit. Not worth it. There's other things you can trade. So let's just go find other things that you can trade. So Bitcoin is definitely in a downtrend. No question about it. Bitcoin Cash is actually looking kind of neutral here. It is the best looking crypto at the moment. Definitely don't want to buy it. But as far as relative strength goes, it is the best looking one. Ethereum is the worst. It's absolutely the worst. It's been a -3 for a while and remains a -3. And Litecoin is looking pretty bad as well. This is why you don't want to try to buy these rallies here. Look at how shallow they are. This one just went sideways before it fell. It's a really tough game of trading to try to catch good timing when the crypto goes up 1%. I mean, these, we're seeing 5-10% moves, and you've got to get perfect timing to get 1% before you get run over again. Again, it's just a bad time to trade cryptos on the long side. You want to be out looking at the Forex market. All right, Ankit, let's talk about the dollar first.
And taking a look at this dollar trend, we are still in a downtrend, but we are getting these bounces off that support area. So, the dollar hasn't been the easy one to trade, I must say, because, we went into a consolidation period, and that was like a beautiful low base. And as we broke below that base, we just had no follow through. And you can see that a lot of dojis, a lot of those wicks on those candles in the last couple of days has been nicely to the upside. So, I mean, this is where we're getting mixed signals here. Trend score is -2, velocity is +2. So I think until we can get above those moving averages, I will get a little bit more excited about the dollar. But right now, the dollar is giving a mixed signal. So I think dollar is a good sort of a day-to-day trade, but we're just not getting that nice trend to the downside here. So a little bit cautious on this one. And if we get above this resistance level that we see, just right above that consolidation period, I think that's where I would want to trade more dollar to the upside, and with the velocity being there as well. So this is one I would be very cautiously bullish or cautiously bearish on this one until we can clear out some levels.
Well, Uncle, let me
Now let's
jump in
go over.
here on dollar because I traded the dollar twice this week, and it fizzled every time. Had profits and it fizzled. Had profits and it fizzled. So it definitely was a frustrating trade. And whenever you have frustrating trades, I used to keep banging my head against the wall because I'm like, hey, I know dollar is going to roll over. I know it's going to go lower. I no longer believe I know anything. And then I just say, whoa, that trade's not really working out and that trend's not working out. Let me go find something else. So go find something else other than dollar. I'm with you on that, Onkit.
Yeah, I will totally agree with you. And then here we are with the Japanese yen. And, this is one of those trades that we correlate with risk on versus risk off. So remember when we had a nice move to the upside, the markets were really doing well. And the markets were actually getting worse. So we saw yen doing really well. So you can see that the yen has pulled back as market has sort of stabilized a little bit. But every time we see a round of selling coming into the equity markets, what do you see? You see those safe haven currencies like the yen and the Swiss franc sort of spikes. So, I mean, this is where we are. I think we are. I was a lot more excited about the yen in the past month. It was what I would say that was a one-sided trade. Now you can see that this thing is kind of lost a lot of its momentum. So it's in between those 20 to 50 moving averages. So like this is also another currency that that bouncing back and forth, but without really a strong, clear trend. So this is the one that is going to outperform. Let's say when the market takes another leg lower, yen is the currency that you want to be looking at or looking at on the long side. I think that's where it's acting as a nice safe currency. But meanwhile, as the market stays choppy, meaning that we see one up day, one down day, or maybe sell off in the day and then recover at the end of the day, what this is doing is creating this back and forth, and that's really how yen is. So I think if you want to trade the yen, just take a look at broader markets to get a better reading. But if you have been very bullish on the yen, I think you want to pair that a little bit because the trend is no longer that +2 that we had for more than a month. So that's really where we are with the yen. But I must say, Swiss franc is another tough one because on a daily chart, you can see this thing has been range bound since last year. But in between, this currency is also acting as a nice safe haven currency. Overall, you can see that a lot of wicks, a lot of ups and downs. So these are the ones that you see a stronger trend, but you also see bigger wicks on both sides. So as you try to decide to pick the time frame, I mean these have really good moves on a day-to-day basis, but not a whole lot of follow through. And that's exactly what we've been seeing in the last few days, is where there's just a lack of follow through. One day it's pretty strong candle, but the next day it kind of fizzles down. So that's just the kind of market environment you're dealing with. And again, if the market stays sort of steady, this thing is also going to hold it steady. So you need that broader market move. And remember, like as Rob said, I really want to get bearish. That's the reason, because then you see more clear trending moves when you see broader markets that are pulling and pushing some of the currencies. So cautiously bullish and cautiously bearish on this Swiss franc here. Now, when we go into the euro, and I've talked about it, euro had a massive move, in the past couple of weeks. We saw the euro go, posting the biggest move in like 10 years. So I think it's just taking that little breather here. You should really look at the price action in the euro. The downside moves are very constrained. So that's just telling me that there's still a lot of buying underneath. So I think we need to see that sort of go sideways as it's pulling back. And then when the next wave of buying comes in, I think that'll be a great opportunity for euro to go long. But yeah,
Oops, looks like we lost Mr. Sharma. I hope that the US has not invaded Canada, and that's why we lost him. Sorry, bad joke, but It is what it is. All right, so let me just follow up on euro. I like euro. I'm just waiting for it to give me a velocity score to where I can buy it. That being said, pound is better. I mean, look at how nice the pullback, or not the pullback, but the base in pound has been. So we got a big breakout in euro and it kind of sold off. Pound isn't selling off. It is actually strengthening through this base. It's a very tough call to when is it going to break out. We got some upper wicks here. Look, trading is not a great environment here. We don't have big green candles that have very few pullbacks. We're not getting that. We're getting choppy action. But pound is absolutely my number one currency of the week. I'm looking long pound, number one. CAD, like the dollar, has kind of broken its short-term downtrend to where we're now starting to get some bounce. We had a base forming. We're starting to poke up above that base. CAD could have a little bit more in it, but I do think the next move in CAD is lower. Just the problem is right here, right now, the CAD is strengthening. So I can't be short CAD, and I don't want to be long CAD either. Here's where I want to be short. Look at this Aussie. Look at this Aussie. We have now spent about a month low basing here. We're down at the bottom of the range. So look, until we get a big move in all the markets, I don't think we're going to get a breakdown of this level. So what I would love to see, two things here on Aussie. If we break down hard next week in the equities, I just want to be short Aussie, period. If it's choppy, just like it was this week, any rally on Aussie, I'm looking to get short in Aussie. So I do like Aussie short. And here's the Kiwi. We had a nice pop. Again, it was already showing us that it didn't want to go any lower. And then we got that pop, take us up above the moving averages. Here we are settling right in the moving averages. It's definitely a little early to make any long-term call on Kiwi, but we definitely know it is relatively stronger than it has been lately. So if we look at our trend scores, it's telling us this is where to hunt. Euro, pound, Swiss franc. Look, that's been the case. I want to be long yen, but guess what? The data is telling me that's not the place to look. Look in the European currencies, and on the short side, Aussie right now, and then CAD and dollar when they turn over. That is the trade long term on the trends. But when you come in here to the velocity, what's moving right here, right now? Well, dollar and CAD are the strongest. They're having a nice bear rally. The Aussie is still weak. But look, all of my European currencies I want to buy, they're not moving. They're not moving. So that means that I'm starting this week off not excited for any early trades in the week because I need those European currencies to start to show some velocity. I've been trading for so long, I no longer have any compulsion to make trades that aren't going to move. I used to just click a button just because the market was there and I was there. But now it's like, I see these situations, I'm like, you know what? I have no desire to try to get long euro or long pound, hoping that it breaks out sometimes this next week. I'll wait for a better opportunity. But let's go ahead and look at some of those pairings and some possible prices that we can set early in the week for some alerts to say, okay, we're finally ready to go. So as I said earlier, pound is my favorite. So let's take a look at pound Aussie. Pound Aussie, let's look at it on a daily chart. And you can see in a daily chart, we are definitely off to the races to the upside. We go all the way back to a year, you can see the pound has been stronger all year, but then really accelerating here. Of course, look, we know all trends are going to end sometime. This trend will end at one point, but right now, it's a one-way trade. We are hitting up against some resistance here. There's no question that 206, 206.50, somewhere in here is going to be resistance. What I would love to see, a little pullback. It does not look like we're going to get it because we're just getting a base here. So for me, 206.50 is definitely a breakout, no question about it. You could set a target up there or an alert or even an order up there. I'm looking for reasons to not trade, not for reasons to trade. I would love to see, just a little bit of a pullback that I feel like I can get a better entry on. Now, where is that? maybe in the 205 area. Pull back to the 205 would be pretty compelling. But again, I'm just going to have to wait and see. But again, if I wanted to make a trade and I was like ready to go and I thought the market conditions were there, no question that 206.50 is a clear breakout on pound Aussie. Let's take a look at Aussie Kiwi. I think that's another currency cross that is pretty interesting here. And I want to take a look at it a little bit longer term because we have simply been going from like 105 all the way up to 112. And it goes from 105 to 112, back down to 105, back up to 111. Now we're a little tighter range, but you can see every time we got up to this 112, it seemed to turn around. If we are going to be breaking this support, which looks like it is holding a little bit here, I think we could easily see a move back down here to 108. So that's a good move. That's a 1.5% move on this. So the big question is, where's the timing? Where's the entry on the short side? We're getting a little bounce here. This is a 4-hour chart. I would love to see a little bit better bounce. Take us into this, maybe 109.50. We're pretty close there. This 109.50 area, I don't think we're going to get much more of a bounce than that, where we get our support and resistance line. So may not get much more than that, but I'm just waiting for a turn. So again, like we had here, a bounce and then a turn. This turn didn't really make a substantially lower low. We're having a tiny little bounce here. Again, I want to bounce and I want to turn. I think that's going to be the entry point. At some point, it will likely break below this 109.20. When that is, I don't know, but that's why I like these bear rallies, because if you can grab these things up here, if it is just a low base, you got plenty of time to sit on a positive position while this thing finally breaks down below support at 109.20. So I like this in the 109.50 area. I think that's a good entry. I wish I could be a little bit more optimistic and say this is going to be a good trading week, but it's not. Everything's in a range. We're likely to break out at some point. Most likely, I think it is going to be to the downside where I can finally get into that bearishness that I want to. But until then, I've got to do what Ankit said, be cautiously bearish. That's it. So trade less. Trade less, look for less setups, especially early in the week. And then late in the week, if we start to get some moves, let's jump on them. But let's not be jumping into markets that are just going nowhere and treading water. Let's wait for the moves. Everyone have a great weekend. Goodbye, everyone.